Hello everyone, it's Mike Hamilton from Trade the Easy Way, and first of all thank you for all your best wishes for those of you who are in the Wealth Club. Yeah, it's been a challenging 18 months, but yeah, my mother died just over a week ago, but yeah, not unexpected. So onwards and upwards, I'm just getting to grips with where these markets are, so I'm going to share my views with you. Interesting week. We've got ECB and Fed, US Central Bank meeting this week. We've already seen a small increase from the Aussie Bank, and we are expecting a 25 basis points rise from the Fed, so from 5 to 5.25%. I think Bank of England are meeting next week. I thought it was this week. Anyway, dollar. This is the dollar index. So we on the back of this decline in the dollar. So the dollar ran up very strongly into the autumn last year, and following the banking crisis in the US, the mini banking crisis, the demise of three banks, or we've just seen a third bank go down, dollar did that push up and then sold into this resistance level and came back down again. So we're just sitting on this trend line with the Fed meeting this week. If we start closing above here at 102.35, then and hold the 20-day average and this zone, then I think we're going to come back to this 107. Alright, so if this is a bottoming pattern and we stay above this trend line, etc., then we are going to see further increases in the dollar. However, if we just hit this 102.35 and close lower, then we're going to potentially sink all the way back to February 22 levels. Bearing in mind the overall trend last year was up, if this is just a 1, 2, 3 wave correction, then we should close above this and we should wind back up, in which case if we look at the pound is already coming off of this resistance area. So we have 3 touches underneath this trend line up there at 126 area. Looks as if these highs are worth selling. You see 125, I would put a stop above 126 and see if we can come right back into 23 lows, and if we break this little support level here, we've essentially got if we close underneath here, we've essentially got a bear flag. And again, given that the pound was so weak last year, these are key resistance areas. So we're in the drop zone from June last year, and here we are just entering May 23 with this coming off. So let's go back to the indices. What the Nasdaq does, the rest of the market follows. So we've had a pretty good year so far. Once we got this pullback in March, late March, we are sitting up. The volatility index is low, so that would indicate that we've still got more upside. So I think it's about the reaction to the Fed on Wednesday. So if they drag this back and hold the pullback, then I think we can come and find 13.5 and 15,000 up here on the Nasdaq. But if we start falling, if we start closing underneath all this support, then we're done. This is going to fall through and come and find 22, 23 lows down here. So I think my guess at this stage is this pullback will hold. Could see a full pullback into 112,800, and then we go marching back up. But I'm going to scrub that if we start closing underneath this level here. So I think the bulls are still in control. So pulling back to this decent move on the 27th of March, April, would make sense. but we may not get there. We've got this huge support just underneath here at 13k, so we may only see 13k come into contact with that 20-day average and then shoot back up. So these are bullish markets still at the moment. S&P is struggling at this resistance area, looking and a lower pin bar up there, so that again looks as if that wants to sit back towards short-term sell signal, and if we don't hold, then this could keep going. So if this is a last hurrah back to resistance and we continue to close lower here, then watch these levels to break and fall back. So what have we got? It's worth doing an Elliott wave analysis on this for this year. So we've had 1, 2, 3, 4, 5, 1, 2, 3. No, that doesn't work, because this corrective wave was much deeper than the initial breakup, so that does not qualify for a 5 and 3 wave move. Let's have a look at this one. 1, 2, 3, 4, 5. So if we get a 3 corrective wave and hold this area, then we start again. The 5 and 3 wave is done, and then we can march on the way up again. However, I would scrub that if we start losing, definitely closing underneath this 4100, and then you would think that 4000 would go, and then we would fall back lower. Okay, UK, I've already been shorting this today. If we close underneath this pink zone, which looks likely today, then expect that to come back to 7700. If that doesn't hold, then hold on to your hats. At the moment, we could be seeing, if we get a decent close up underneath here, then we could at least see a full repeat of that, and maybe more if this doesn't hold. Right, moving on. This is wheat, so I've scrubbed the wheat. We looked as if I thought we were going to hold here, and pushed up into this resistance, and then just kept closing lower, and here we are. Look as if we can hit. We're very close to $6 on the wheat, and we look as if 5.5 could be seen here at the moment. Unless we get a significant close that engulfs that, I'm backing off. We are extreme RSI down here. In fact, at the moment we are divergent, and this is RSI, and you can take divergence from RSI. So if we get an immediate close above this drop zone here, I would get back in the wheat. In the meantime, I've got to leave it for obvious reasons. Let's look at gold. Gold's been we're just sitting up here. This is a good bullish consolidation, and a consolidation is normally over when you get a connection with a support level. So we might see a deeper retracement into the Fed on Wednesday. If so, down there at 1950, 1970, I would be a buyer. Because if we subsequently close back above this 1980, 2000, then I think we can go back to last year's high and beyond. So I would hold out for a dip into that Fed, and I would buy and hold that. Silver is very similar. That's flatter. In fact, no, it's not similar. We are sitting down here at these lows. Copper. Right, so copper's already come into a very interesting area, 84.40. I think any dip on Wednesday back into 82, 83, if you see it, is buyable. You may not see it because we are already picking up, but as you can see here at just before the open in the US that he's weaker again. Right, quick flick through let's look at some retailers. Let's look at Tesco. So just trying to gauge the strength of feeling and the mood of the markets in the UK. So if Tesco closed underneath here, hold on to your hats, but there was decent volume coming in on these dips. Even retailers like ASOS are holding up. So they got above £10 here, now they're at 7.50. I tell you, if we start closing above that, then I think we can go back to £10 plus, start closing underneath. So whichever way we come out of that box, the box being the 793 high and the 680 low, whichever way we close outside of that is going to be the direction, I think. The volume is alright, but we can't close above the 20-day average at the moment. TUI. Wow. So we've come from £10 to just above 5. That does not bode well at all. I didn't realise TUI was so weak. Let's look at IAG. Strong. Okay, so quick look at housing. Let's have a look at the bellwether for housing. Persimmon picking up. Financials, we've got Lloyd's. Lloyd's looks alright there. I think that looks high. We're holding the 20-day average here. I think yes, this recent dip on Friday has potentially got bought. We close above 50 for obvious reasons. That shows good strength. Let's have a look at where's Barclays. So we're just pulling back into this big Thursday bar. So I think any test of 155 is buyable. Let's look at basic materials, and we've got Man Group. So we've been on a run, just coming right off resistance today. Any pullback to 210, £2, 210, I think is buyable. We're just reconnecting with the 20-day average on that. I'm very bullish things like Man Group. Rio. Okay, so I thought Rio's come right back into a very key area. Watch that £50 mark. Because if we start holding here, that could do very well. IOF, Gem Diamonds, no. Right, let's have a quick look at miners and I'll leave it. Pan-African, pull back. That's a buy at 16.90 if you see it, I think. No, it's been on a run. Let's leave that one alone. TGAT. Horrible, don't like that chart. Hochschild. So they've been on a very decent run. That's been up as far as 95. I think this is a good pullback. Look at that support. That's very, very good support on Hochschild. There's no buy signal there. We've got a hesitant holding pattern on Friday. If we close above this 71, I'm in. Alright, I'll leave it there. I will update you as the week unfolds. Take it easy as we wait for Fed and ECB. Talk to you soon. Thanks. Bye.